Hello and welcome back to the Chart Pattern Trading Masterclass by Wealthy Education. In this video, we'll talk about the cup and handle pattern. So a cup and handle pattern is simply a pattern where price does that. So it gradually kind of turns higher, forms a little bit of consolidation, and then takes off. Now, what you like about this is, unlike the double bottom, it's a slow build up. So that means something's changing in the overall outlook. It isn't so much a reactionary move. It's a true kind of grind. You get a bit of a consolidation here in what looks like a flag, something that we'll talk about here in a few videos, but it's consolidation. So the market is drifting lower, rising, kind of taking a breath, and then it takes off. The idea is that you get the return of at least the height of the cup. Now, they call it cup and handle because it looks like one of those old teacups. At least that's what they say. So in front of you, have a dollar Canadian dollar. You can see that there is one of those patterns there, like a U shape. And then there's a little bit of a consolidation and we take off. So the question is, do we get what we're looking for? And the answer is yes. Once we break out of this handle, we get exactly there and then pull back and then get more. You put your stop loss on the other side of this handle. Now, something that's probably worth pointing out here is notice that we bounced from the 120 level. It's a large round number and people will pay close attention to that. The momentum clearly has slowed down for the sellers. And then we just see a nice sustainable rally. Does it last? Well, so far it has. It's a pretty nice move. You can see at one point it gained 20 handles. Of course, it was over the course of 2 years, but you can see that that did in fact get the ball rolling. So let's see. Let's do let's do Amazon. So Amazon on the daily, you can make an argument. And this does take a little bit of artistic license, admittedly, but you can make an argument for one here. Basically, you're seeing the market try to stabilize right here at $80. Nice round number. We break above the top of that and we walk right along with the 50-day EMA. That's not uncommon to see all of these things come together. And that's exactly what you want to see. There are, this is what is known as an inverted hammer. So breaking above that is pretty bullish as well. Keep in mind that when you look back through time, back here at the bottom of this, you can see this was an area that had been important. So previous support and resistance clearly coming into the picture. Now for crypto, you won't have as many examples just because crypto hasn't been around as long, but you can make an argument for that in Ethereum. And notice that it's right on top of support. So once we break above that, we take off. I'll go ahead and mark that. I am kind of zoomed out. It's a little easier to see on the higher time frames like this. But you can see that's what we've got there. This, again, you're going to have to probably look, if you want to find examples in crypto, probably on these shorter time frames. So here's one, 4 hour. We break above the 200 EMA and just launch. Another thing that I'd point out is we broke above 1300, which was resistance. So that all comes into the picture. And support down here at 1000 had been tested a couple of times. You could even make this a double bottom. So you can see how everything kind of ties in together. Remember, you want to buy on a break of the handle, put a stop loss on the other side of it. That way, if you're aiming for the size of the cup itself, you're pretty much guaranteed you're aiming for about 2.5 or maybe even 3 to 1 on your risk to reward ratio. In the next video, we'll talk about mastering the inverted head and shoulders pattern.